Hey everyone, welcome to the Explainer. Listen, if you're a BS accountant student staring down the barrel of the LEPCA exam, you already know the deal. Philippine taxation can feel like an absolute monster of a subject, right? The rules are incredibly dense, the updates never seem to stop, and honestly, trying to memorize everything from a massive textbook is just overwhelming. But don't worry. Today, we're going to completely change how your brain processes this information. Think of this explainer not as another boring lecture, but as a focused, brain-friendly cheat code. It's designed specifically to help you master post-EOPTA taxation with zero fluff.
Because here's the real challenge. You don't just need to cram this stuff for tomorrow's quiz. You need to actually lock it into your long-term memory, so that when you sit for the board exam in 2 or 3 years, these concepts are just instantly there. So how are we going to do that? We're gamifying your study session today. We've structured this as a strategic, level-by-level study hack. We'll break down the most complex VAT rules into their absolute core mechanics, giving you just the highest yield data you actually need to pass.
To keep the cognitive load nice and low, let's map out exactly what we're tackling today. First, the Input VAT TRIAD. Second, EOPTA, invoice, and receivables. Third, capital goods and special credits. Fourth, admin timelines and appeals. And finally, our LECPA bullet review.
All right, let's jump right in. Level 1, the Input VAT TRIAD.
Okay, before you can even think about doing complex VAT computations, you need a solid anchor. I want you to lock the word TRIAD into your brain right now. These are the absolute non-negotiable requisites. T is for transaction. There has to be an actual purchase where VAT was passed on to you. R is for registration. You, the buyer, must be VAT registered. I stands for in the course of trade or business. A is for attribution, and D is for documentation, which absolutely must be a valid VAT invoice. Now, listen closely. If an exam problem is missing even one of these 5 elements, boom, your allowable input tax credit instantly drops to 0. It is a trap examiners absolutely love to set.
Now, what's really interesting here is the A in our triad, attribution. You basically have to trace where the purchase is going. If your input VAT is directly tied to a VAT subject sale, awesome, you claim 100% of it. But what if it's tied to a VAT exempt sale? That input VAT just gets absorbed as a cost or expense. You cannot claim it as a credit. And here's the kicker. What happens when a purchase is used for both taxable and exempt sales, and you just can't separate them? You have to use a ratable, percentage-based allocation. Always watch out for those mixed sales scenarios in your test questions.
Moving right along, Level 2, EOPTA, Invoice and Receivables.
Let's see how this plays out in the real world with the Ease of Paying Taxes Act, or EOPTA. Contrast is absolutely key for long-term retention. So check out this massive shift. I need you to completely erase the term official receipts from your VAT memory. Literally delete it. Under the old cash basis rule, you needed an official receipt for services and an invoice for goods. But under EOPTA's new accrual basis mandate, the exclusive VAT invoice is now the absolute sole primary document for both goods and services. So whether you're selling gaming laptops or providing accounting services, the invoice is king.
Because of this huge shift, the BIR had to implement some super strict transitory rules for businesses that still had piles of unused official receipts lying around. For the exam, you need to know these rules by heart. If a seller wants to actually keep using their old receipts as a primary document for input tax claims, they have to physically strike through the words official receipt and aggressively stamp invoice right on it. If they forget to stamp it, or if they stamp not valid for claim of input tax, well, it becomes a mere supplementary document, completely useless for input tax claims.
Okay, this next one brilliantly illustrates a brand new relief mechanism introduced under EOPT. Since we're all on an accrual basis now, a seller has to declare and pay output VAT the exact moment a service is rendered or goods are sold, even if the customer hasn't actually paid them yet. But what happens if the customer totally ghosts you past the agreed credit term? Well, EOPT now allows sellers to deduct that previously declared output VAT from their next return. It's a massive lifesaver for businesses and, frankly, a highly testable new concept for you to watch out for.
All right, Level 3, Capital Goods and Special Credits.
Here is your next major study hack. Board examiners are obsessed with testing newly updated laws. So, if you're reading a word problem and you see aggregate depreciable capital goods purchases exceeding 1 million pesos in a single month, excluding VAT, of course, an alarm bell should immediately go off in your head because a massive rule change applies here.
If you're studying from older materials, you might be reading about the 60-month amortization rule, where you basically had to spread that input tax out painfully over 5 years. Stop right there.
The 60-month amortization rule is dead. It officially died on December 31, 2021. What does this mean for you? For any modern exam problem set after January 1, 2022, you are going to claim that entire input VAT as a single lump sum immediately on the date of purchase, completely regardless of how much it costs.
Now, let's look at this direct comparison between two special credits that constantly trip up students. Transitional input VAT is specifically for taxpayers who are newly registering for VAT. Think of it as a welcome gift. It's calculated as the higher of 2% of beginning inventory or the actual VAT paid. On the flip side, presumptive input VAT is a flat 4% based specifically on purchases of primary agricultural inputs, and here's the catch. It's only available for very specific processors.
To grab that 4% presumptive VAT, you need another brain anchor. Just memorize the absurd acronym SAMA-MICA-PARE. It stands for processors of sardines, mackerel, milk, cooking oil, packed noodle-based instant meals, and refined sugar. And here is the exact trick examiners will use to mess with you. They will try to casually include packaging materials, fresh fish, or canned fruits in the problem. Do not fall for it. Remember, presumptive VAT strictly excludes those. It only applies to the primary agricultural inputs used to make the SAMA-MICA-PARE products.
Okay, get ready. Level 4, Admin Timelines and Appeals.
Welcome to the final boss battle of our explainer, mastering those incredibly strict administrative timelines and BIR audit rules for VAT refund claims. When a taxpayer files for a VAT refund, the BIR doesn't just treat every single claim the same way anymore. Under the current rules, they use a strategic risk-based approach. If a claim is classified as low risk, there's literally zero verification of sales or purchases. Medium risk means they require at least 50% verification. And if your claim gets flagged as high risk, the BIR scales that all the way up to 100% full verification of all sales and purchases.
So, the absolutely crucial thing to remember here is the exact sequence of days. From the moment the complete claim is officially filed, the BIR has exactly 90 days to act, either to grant it or deny your refund. If they deny it, or even if they just partially approve it, the clock resets. You then have a very strict 30-day window from the receipt of that decision to elevate your appeal to the Court of Tax Appeals, or the CTA. Mix up these numbers and you instantly lose the point on the exam.
We made it! Level 5, the save point, our LCPA bullet review.
Incredible job sticking with me. You've just made it through some of the absolute most complex material the taxation syllabus has to throw at you. Now let's hit our save point so you don't lose any of this progress. Lock these 6 bullet points into your memory right now, because they represent the absolute highest yield testable material for this section of the LECPA. Remember your TRIAD requisites. Remember that the exclusive VAT invoice is your only substantiation now. Remember the death of the 60-month rule for capital goods, the specific formulas for transitional and presumptive VAT, and of course, that totally unforgiving 90-30-day timeline for refunds. See, with these cheat codes locked into your brain, you aren't just blindly memorizing textbook paragraphs anymore. You're actually mastering how the tax law works in the real world. You understand the why behind it. So as you close out your study session today, I want to leave you with this. When the BIR inevitably updates these rules again before your actual board exam, will your foundational logic be strong enough to adapt? Keep pushing, stay focused, and we'll catch you in the next explainer.